Welcome to the class 5. So, in the last class, we had discussed about what is capital expenditure. Capital expenditure whose benefit will not be expired within 1 year, whose benefit will extend for more than 1 year. The revenue expenditure are those expenditure whose benefit will be exhausted within 1 year. Capital receipts are those receipts. Uh, this is in not recurrent in nature. Capital receipts are not received recurrently. That is, month after month or year after year. It is not received once in a lifetime. Once in a while, it will be received. So that is called as capital receipt. Revenue receipts are it's like a income. It's like operating income where you receive those income or receipts quite often. Every month you are receiving rent. That is a revenue receipt. Every month or every year you are receiving subscription from members. Then it is a revenue receipt. So I hope that this is clear. So we are going to discuss a problem. So, from the following receipts and payments account of Jaipur Sports Club, prepare income and expenditure account for the year ended 31st March 2019. So, I'm just going to go through this. To balance brought down 2 lakhs, to entrance fees. So, we are expected to prepare income and expenditure account on 31st March 2019. So, we have 2 periods, 2017 and 18-19, which is relevant. 2018 and 19 is relevant, so we're going to take this. Then subscription, we have 18-19, 90%. So we need to have 100% for 18-19. Then life membership fees. So we are going to identify this is a revenue receipt. This is a revenue receipt. This is a revenue receipt. This is a capital receipt. So it will not come. Donation, it is a revenue receipt, right? So we saw the last class that donation, if it is a general purpose, general donation, it is a revenue receipt. So I'm going to take you through here. That is, we are going to mark this as revenue item. Donations for tournaments. Now, donations for tournaments, it is for a specified purpose. So, it will not come under revenue receipt. So, you cannot take this as your thing. So, I'm just putting an into. Subscription for governor's party. Now, subscription for governor's party is not relevant for us right now. So, subscription for governor's party will not come. Then, interest on 8% fixed deposit. Now, this interest is a revenue receipt, so this will come. Interest will come. Okay. Then, sale of old newspapers. Now, sale of old newspapers is a income. So, this will come. Is of daily purpose. Usage is daily purpose. So, sale of old newspaper will come. Sale of old sports material. Now, there is a loss. See, the book value is 1200, but you have sold for 500, which means the loss of sale is 700. So, I'm just going to mention the loss here, which is 700. This is a loss, right? So, this loss will be accounted in the expenditure side. Then locker rent that we are received 6,800. It includes 600 for the time period 17-18. We are in the time period 18-19. So we have to deduct this from this and write the amount. Rent now including 15,000 for 17-18. We need to deduct 15,000. Then insurance premium 60,000 minus 15,000 because it is not relevant for this period. This period is 18-19, right? 18 to 19. That is 1st April 2018 to 31st March 2019. 1st April 18 to 31st March 2019. So this bill should be removed from this 60,000. Buy sports equipment. This is a capital item, so we should not include. Furniture is also a capital item. We should not include. Buy 8% fixed deposit. So this is also a capital item. We should not include. Buy tournament expenses. Tournament expenses. We have to enter tournament expenses under expenditure, um, but it is for a specified purpose. It is not for a general purpose, so we are not going to record this. Then books is a capital expenditure. Newspapers, all these entries we should not record, because newspapers is a uh, see, once this newspaper is bought, it's going to be kept for a long time as a record. So it will be belong like a capital. Printing and stationery we will record. By balance carried down 1,80,000, we have to keep what to do. Now I'll just prepare the format. I think in the next class, that is class 6, I will be preparing the account. This will be like a continuation for you. So I'm just going to prepare the format of how we are going to do this. Okay, so just going to minimize this so that we have sufficient space. So income and expenditure account. Here you have the debit side, which is expenditure. Here you have income. Just going to give the borders so that it looks like an account. So here you have the debit side and here you have the credit side. Okay. So income and expenditure account for the year ended 31 2018. Okay. Now, so first let me start. I'm just going to clear all these items so that it will be better clarity for you. Okay. So first item we are going to look into is entrance fees. The receipt items you will be recording it as income. Payments will be usually recorded in expenses side. Now, generally this is how the question will be asked. They will give the receipts and payments account. You need to prepare the income and expenditure account from that. They're just going to a little bit expand so that there is better clarity. Okay, so in the next video, that is class number 6, I'm going to prepare the solution for this so you can have a better clarity. Thank you, class.